David Morgan with Money and Metals for the week ending August 7, 2015. Well, before starting overall, I want to go through the metals top to bottom and look at where we are so far this year. Aluminum's off 15%, copper almost 20%, lead's down 9%, nickel 27% down, tin off 22%, and zinc off 14%. Gold is off a mere 7.5%, palladium off 25%, platinum off 20%, and silver only off 6% from the beginning of the year. The HUI down 35%, the XAU off 33%, and the US dollar up about 9%. Crude oil off 19%, heating oil off 16%, gasoline up 10%. So that's an overall view of all metals, or major metals anyway, base and precious, for the year so far. Obviously, you'll notice that not even one is in positive territory so far this year. The commodity crush continues. Moving on to markets overall, the U.S. stock market has been failing recently. It's been in a large distribution pattern for quite some time, and it seems as though the high has been seen. The reports coming out of Wall Street and some of the stars are starting to fall as well, and I think perhaps we're going to see what I forecast, along with many others, that the fall may see a further fall in the equity markets. We also saw some shifting between the money markets. China moved a great deal of money into the cash market, and moving foreign exchange, setting a record of several months moving out of China and into foreign exchange. Money markets in the U.S., very similar move, meaning moving out of bonds, moving out of stocks, moving into cash, and parking funds into the money markets. Moving on to gold, we had quite a week in gold. It showed a bit of strength. I'm being a bit facetious, but the main event in the gold market between the internet and the alternative media was when gold showed a bit of strength, and there was a big discussion on the internet blogs about the eligible and registered category in the gold market. The truth is that there is very little gold in the registered category, and the amount of gold in both registered and eligible on the COMEX is very, very small. However, that is not a primary source for delivery of gold or silver, and due to the fact that certainly in theory someone could corner the gold market rather easily on the COMEX remains a fact. However, as only 1% is ever delivered, the reality of it is it probably wouldn't take place. Another thing to keep in mind is that the the categories between registered and eligible can shift back and forth rather easily, although it is a fact that to move from the eligible category into the registered category, there does have to be a signature or electronic transaction that takes place to enable it to be sold. Eligible by itself without that is sitting in a warehouse owned by somebody, usually a hedge fund or large investor or the general public even, that is storing it in a given COMEX warehouse. However, there are entities that own it. And finally, to belabor this point, a lot of times when there's stops and there's someone ordered to give delivery to somebody else, if you really carefully look at it and drill down, what you'll see is you'll see the same entity on both sides. In other words, it's a wash trade, even though they're quote unquote standing for delivery and they go past first notice day, last notice day, and delivery days. So I've done this myself, not in any large quantity, but it can be tendered back. So often, even though the numbers may look large for the amount of gold to be delivered, when it finally gets to the bottom line, there's really not that much. For example, a group of, let's call it Stone Group, has so much that they are required to deliver, but then you see Stone Group is also going to take delivery of so much, and very few people really get into the minutia like that, but it does exist. So all I'm trying to convey here is that certainly it's something to pay attention to. Let me just say that the eligible category has been increasing significantly in the silver market over the last few years, And the gold market, the registered has gone down and down, and the eligible has gone up slightly. But of course, the gold market is vastly bigger than the silver market. And of course, the COMEX supplies, as I just said, is very small. Looking at the miners, there was a deal struck between Royal Gold and Barrick for a streaming situation with a good stream of gold coming from Barrick to Royal and also a silver stream involved. It's in the news. You can get the details by looking for a press release during the last week. On top of that, Fresnillo, the biggest primary silver producer in the world, did announce that they were going to cut back their funding for operations by almost 20%. So certainly these low prices are having some effect. And year to date, if you go back to last quarter, there's actually been less silver mined on a global basis than there was the previous year. It's slight. When we're talking 800 million ounces approximately being mined on a global basis, 1% up or down or 2% up or down, certainly it's a substantial number, but it's not going to sway the supply-demand curve that much. The fundamental factors, of course, surrounding the metals are the most important, and they've certainly lost or seem to have lost their status as a safe haven investment. And I say that somewhat tongue-in-cheek, with the fact remaining that not only has the U.S. Mint started reminting silver eagles, and the supply is not keeping up with demand, we've also seen the same situation with the Canadian Mint as well, running out of planchettes. So certainly the small investor or the retail investor, excuse me, certainly has an appetite for these low prices, and I commend them for it. And lastly, a bit of a shameless plug, myself and most of the crew will be down in one of the more hot states in the Union, visiting what I call the mobile mill. That's available to our members, of course, and it's also available to our free list. If you're interested in learning more about it and you are not on our free list, just go to the website, scroll all the way down to the bottom. If you scroll all the way down to the bottom, all we ask for is your name and an email address, and then to verify that it's really you. We will be reporting on the progress of this mobile mill, which could be a bit of a game changer for the junior mining industry. I want to be clear about this. It's not going to affect Newmont or Yamana or Royal Gold or Franco-Nevada or any of those. But in the junior sector, it actually could play significantly for those that have, let's say, ore in a tailings pile or something along those lines, where they might be able to extract that, split it with this company that's put together this off-the-shelf components put together. And they've been tweaking this technology for quite some time. We're going to witness it. We're going to take the film crew down, and we're going to report on it. So that'll wrap it up for this week in Money and Metals.